Well, thanks very much, Paul. I'm not sure whether I can live up to all that, but thank you, and it's a great pleasure to be here. It's the first time I think I've ever spoken to pillars before, so I hope there is somebody out there somewhere. What I wanted to do today is go through 3 or 4 things. I just want to put in context my background. Paul gave you a bit of a feeling for it. And then I want to speak about Westpac and what happened in the early 90s. And then I'd like to make a couple of comments about mentoring, which I'm now involved with professionally. And then perhaps leave you with a half a dozen or so principles of leadership, which were, in my opinion, very important in my career as I went through banking and later as a company director. So let's just talk about why did I join the banks for a start? Well, I joined the Bank of New South Wales, but I really wanted to be a teacher. And everyone wanted to be a teacher in my day, and that didn't happen because of one simple little thing called final examinations. I didn't quite get there. So I had to join the bank. I had a brother who was in the Commonwealth Bank and 2 sisters in the National Australia Bank, so it was only natural my father pushed me into banking. And I was transferred out to the country within 6 months of joining the Bank of New South Wales. And it was while I was out there and living in a hotel that I decided that I really wanted to start to get a little bit serious about this career of banking. So I completed my banking qualifications, and then that inspired me to do more study. So I then went part-time to the University of Western Australia and completed a Bachelor of Commerce degree. In those days, doing it part-time was 5 years of grind. And then when I was transferred by the bank across to Sydney, I undertook an MBA at Macquarie, again part-time, and again about 3 years. But my point in just mentioning that is that on the way through, I developed a very strong interest in leadership styles, because you see many of them in a large organisation like Westpac as it is now, or as it was then the Bank of New South Wales. I used to read biographies, and to this day still do. I love reading biographies, and particularly about people that I actually have met and know, and just seeing the insight of the way they approach leadership. And I observed very closely my own senior people, and they became really silent mentors to me. They didn't know that at the time, and I could probably mention a half a dozen names. I won't, because it'll only embarrass them. But I used to watch the way they used to conduct their leadership style, either internally among the staff or externally among customers and the broader community. But watching people and observing people in the way they conduct their leadership style, to me, is a very important thing, and that's why I call it the silent mentors. And they're very many and varied, as I said, among the senior management of the bank, and that became more evident as I came over here to New South Wales, to the head office of the bank at 60 Martin Place. And I have to say, as you'd probably know too, that it's amazing how people know who is the most effective leader and who's not. It stands out, doesn't it? Then I went into international banking. As Paul said, I went to London for the bank and later Hong Kong, and learned then the difference in leadership styles from an Asian perspective, and indeed even in the City of London, where the old merchant banks were well and truly in their fore at that time. Hill Samuel and Warburgs and many of the others that were there used to employ the absolute cream of people out of the universities, and I was able to see again a different style of leadership in London to what I saw later in Hong Kong when I was there. And of course, you're exposed to cross cultures when you're in Asia, and I determined very quickly that language is certainly not the only thing that's different. Then, of course, came the top floor. And that's when I came back from Asia, joined the executive committee, heading the retail bank at a time when it was a very large and needed a big increase in business to get through what was a big infrastructure and technology. And as Paul has mentioned, I was appointed the CEO in 1991 and resigned in 1992. My board responsibilities, Paul has outlined to you, and then ultimately I joined the SMG Group as a mentor, and that's what I've been doing at the moment in senior executive mentoring. So what I want to go on now is to something I've called the Third World War, because that's what it felt like at the time, I can assure you, the world versus Westpac. This is the early 90s. You remember back in 1987, there was the big stock market crash, and the way the world economies tried to address that issue was to increase significantly the liquidity. You saw the same thing happen during the GFC just a short time ago. So from the outset of coming back from Asia, I walked straight into this problem where there was this massive increase of deposits going on, and there was, as it happened during the GFC of just recent times, there was the flight to quality, and the major banks were the best recipients. They got all the deposits. And it fueled a massive property boom. And the value of properties at that stage were extremely high. There was a lot of building going on, and it didn't take long for the Reserve Bank and the then Treasurer Paul Keating to decide that they should start putting up interest rates. And for those who can remember that time, interest rates, housing rates went to 17% before Paul Keating put a stop to it. And the base rate for an ordinary overdraft went to 21.5%. So if you're a farmer on about 4% margin or something, you're about a quarter of your debt was increasing each year without you going through the front gate. So interest rates went up very quickly, and it was a very long recession. It went on for 2 years, 24 months, probably started around the time of the air pilots dispute, for those who remember, and that affected a lot of the tourism assets around Australia, and particularly on the east coast. Unemployment jumped to 11% then during that recession, and it was deemed to be the worst property crash for 100 years. And our estimates at the time at Westpac was that there was no way that it was going to recover for at least another 10 years. So what was the effect on Westpac? Well, after the 87 crash and this big increase in deposits, Westpac's assets in just a 2-year term increased by 52%. Its corporate assets, its wholesale banking assets, increased by 65% in just 2 years. Property lending, as I've explained, was very widespread, and a lot of the properties became extraordinarily overvalued. And the biggest finance company in Australia at the time, Australian Guarantee Corporation, AGC, which was fully owned by the bank, was involving itself in joint ventures where not only were they lending for property, but they're actually taking equity positions, and the projects were actually part of their ownership. Corporate failures didn't take long to come. When you've got interest rates running around 21% and massive contraction in demand, didn't take long for the corporate failures to come through. And you may remember some of the names. The first one to roll over was Hooker, a well-known old name, was bought out by Herskew from Melbourne. It went over. Linter, bought out by Goldberg. That went over. Westmax, Girvan, Greetings, Adsteam, remember that great conglomerate? Robert Maxwell in the United Kingdom, who went for a swim one night and forgot to come up. Macy's in the United States, they went into liquidation or to bankruptcy at the time. Olympia York, a big property company, and home here, Channel 10, was in awful difficulty. And in fact, right at the end, Westpac ended up owning Channel 10, which was verboten at the time. And I remember having to go across to the then governor of the Reserve Bank, Bernie Fraser, saying that we've just acquired Channel 10 as a debt reconstruction. And after I picked him up off the floor, he said, well, I suppose there's nothing we can do about it. And I said, that's right. And so the chief executive of Channel 10 actually reported to me at one stage, which was quite an experience. Problem with some of these bad debts, not necessarily the ones I've just mentioned, but I remember going to the board and the first 8 bad debts, large bad debts, 50 million plus, the first 8, 6 of them either involved some gross misleading of information with the bank or straight out fraud. And that was the sort of thing the banks were contending with at the time, because people's honesty starts to drift when things start to go wrong. Non-performing loans were about 14% of assets, and normally for an AA bank, it should only be about 1%. And we were operating at about 14%. Now, provisioning cover, the amount of provisioning that was taken for these bad debts, was only about 30%, the lowest of all the major banks. The problem loans were at a level of about $7.2 billion, and that matched roughly what our capital was at the time. So that's how vulnerable we were. And 50% of those non-performing loans were receiving absolutely no income whatsoever. The rating agencies were giving us merry hell, as you can imagine, And they kept on quoting Norway's experience, and they believed that the Australian banks, and Westpac in particular, were likely to go the same way if we're not very careful. And the Reserve Bank became very concerned. The rating agencies, of course, started putting down our ratings, and there were 3 major rating agencies at the time. And as each time they dropped us down a notch, then the other one would do it. But each time, of course, you'd be put in the papers and be a major problem about it, even though you're all coming down to the same level by the 3 agencies. We tried very rapidly to decrease our expenses. The staff was dropped by something like 7,000 over a 2-year period. And you can imagine the staff morale was down. Alan Jones was having a lovely time on 2UE as he was then, because Westpac had been going through, for those who remember, the Westpac letters affair and also foreign exchange loans, the so-called foreign currency loans affair. So the ultimate was that Westpac had to announce a loss when we revalued all the properties of $1.7 billion, and about $1.1 billion of that 1.7 was to do with AGC. So it wasn't very pleasant sitting there as the CEO in its 175th year, never made a loss before, having to make and announce a half-yearly loss of that magnitude. It was unprecedented at the time. Well, what did I learn from all this? Well, I've first of all learned that banks are pretty large, and when there's a downturn, you go down with it. And that's the trouble with banks. They're very pervasive, the major banks. They're operating in all parts of the economy, so that when things are going well, the banks will go well just by osmosis, just by momentum. And conversely, when things are not going well in the economy, they will also start to struggle unless you're very, very disciplined in your management. The other thing that I learnt was about the governance principle of subsidiaries. Westpac had AGC, I mentioned to you, the largest finance company, Partnership Pacific, a merchant bank. It owned Ordminute, the stockbroker. It owned Bill Acceptance Corporation, which was another small merchant bank. All of those operating in the market, most of them lending for property, but of course they all had the red W above their buildings, and they all were drawing on the same source of capital. But the governance, the actual way they were managed, was not very good at all until we got it totally under control. So that was a harsh lesson to learn as to how to control your subsidiaries. We also had difficulty of maintaining the relationship between the management and the board. Clearly, when things were going wrong at such a rapid rate as they were with Westpac, the board started to lose confidence in the management. And you're the one, the CEO is the one in between. You've got the management thinking the board are a lot of turkeys, and I can assure you the board thought the management were a lot of turkeys, and you're sitting in the centre with a foot on either side of the camp. The management information also we learned very quickly was totally inadequate. When the rating agencies were quizzing us about the depth and the scope and the intricacies of our property portfolio, we frankly were unable to answer a lot of their questions, and that made us sharpen up our management information very quickly, and so we learned a lot more about just how widespread the property problem was throughout the group, not just the bank. We had to control remuneration practices closely. I certainly learned that. We had some parts of the group that were still living in fairyland and demanding very high remuneration packages at a time when the bank itself, or the main company, the holding company, was in financial difficulty. So we had to control costs very tightly. And also it taught me a lesson about the quality of management and how important it is to have very good people, because they worked pretty hard during that time. Credit control was hard to manage. The workouts, when you get a bad debt, for those who have been involved in that area, it's hard work, hard slog, hour after hour of trying to get the money back, if indeed you can. But the one big thing that I did learn was the strength of the retail bank. All through that period, with all the things that were going on the wholesale side of the bank, the retail bank just plodded along. It didn't grow its earnings very rapidly, but nor did it decrease them very much either. And it just was able to provide quite a stable support and anchor to the remainder of the group. And I have to say that when I hear people say, oh, well, Westpac was about to go broke, no, it wasn't, because it had this giant retail bank underneath it. So what was the leadership challenge in all this? Well, as I've already drawn attention to, there was a huge tension between the board and the management. That was very hard to manage. We had a particularly hands-on chairman at the time who had been a large industrial company chief executive, and naturally his directors looked upon him to keep in close contact. He certainly did that, I can assure you. And so that was a problem for the management. Convincing the board of the seriousness of the bank's position. That was something. I remember we were up in Lura and we, the management, had decided we wanted to have this giant write-down of our properties. And it was very hard to get the board to understand, first, the seriousness of the position that we were in, and secondly, how to go about to addressing the issue. And we eventually got there, and if it hadn't have been that one of the directors was a former governor of the Reserve Bank, and fortunately he was able to point out to the remainder of the directors, and the chairman in particular, that the Reserve Bank are taking this issue very seriously, and in fact the directors better start taking it seriously as well. And so the compromise was that two of the large property companies in Sydney were appointed, Bailey Knight Frank and James Long Witten, and I know Roy's here tonight. Roy remembers that very well. They were asked to undertake valuation of all the properties that we could possibly scrape up and put a valuation on them, and then we just took the write-down down to that valuation. It was a pretty dramatic effect. And they also appointed Paul Volcker, who was the former Fed Reserve Chairman for the United States, who by then had become the chairman of the James Wolfenson boutique investment bank in the United States, the bank's advisor. He came out to go through all the numbers to make sure the management were doing the right thing. So then there was the challenge of leadership of constant briefing of the institutions, the rating agencies, of course, as I've already mentioned, and indeed the media. There was visible management burnout going on around. You could look around and you could see the eyes all going black and blank faces around the place. And that was a key problem that I didn't share with many people at the time, but was something that I was very conscious of. And that when an executive would come to me and say, look, I just want to take a few days off, I used to insist on at least 2 weeks. That had to be a minimum to at least go away and catch your breath and come back again. Staying in touch with the staff was a problem. Remember, this was a big bank. It was a lot of branches involved, and out there that people were facing the community and the customers, seeing all this about Westpac in the papers all the time. We had 2 full-time media people. One day, I think they took 85 different inquiries from the media. And every night before I went home, I had a sheet of what was likely to be in the paper about Westpac tomorrow. And it was never just a few dot points, believe me. And I remember having to go on 4 Corners with the late Andrew Olley, and it was a live interview about an foreign exchange issue that occurred in the bank. And you had to do that to at least demonstrate to the staff that you were still there and you were still leading the place. And I did a similar thing with the current affair program with Mike Willisey over a customer in Gympie who was taking the bank to task. So staying in touch with the staff was very important to me. They were long hours, and you had to have the physical condition. My 3 days at the gym were well and truly worn out. Facilitating a very tough debate all the time was hard. That's within the management and within the board. It was constant. But with all that going on, remaining calm was the main thing that you had to do. Absolutely remaining calm. And it all came to an end on the 17th of December 1992, almost 20 years ago, when Kerry Packer and Al Dunlap entered the boardroom after taking 10% of the bank. And after about 3 hours, the chairman came out and said, they want you to resign. In other words, you've been fired. So that was sort of the end. That was in the December, after having taken the big half-yearly loss in May. So there was a big struggle to have a rights issue in between. We ran into a tax problem in the United States. That almost crucified the rights issue. So it was just constant, one battle after the other. And as I said, it was the world versus Westpac. It was quite a time. Okay, So I just want to make a couple of words about mentoring, because that's what I've gone on to since I've retired from active corporate life in 2004, where a very smooth-speaking lady by the name of Virginia Mansell convinced me that I should become a mentor particularly to the banking industry, although not all my clients are in the banking industry. But at the beginning they were, and I found it a very rewarding issue that you can have confidential discussions with your clients. It's a very important ingredient of this approach. There's no conferring with the sponsor, of course. The person's being mentored's boss. Once you start the mentoring practice, you don't talk to them at all. You must have good rapport between the mentor and the person being mentored. Open and honest and frank conversations, and usually starts at the beginning of the mentoring practice with a download of the life history of the person being mentored, and the mentor is usually available between meetings. The discussions are conducted at arm's length and objective, so the mentor is really a friend but not a friend. He's absolutely a sounding board and takes a helicopter view of the organisation. And you try and encourage the mentor to look to see how other people are seeing the person being mentored. So in other words, you don't operate in a capsule. You are part of an organisation. So how do other people see you? And the mentor helps the person being mentored just to recognise that. So you're able to bring up and consider other options, but of course the mentor is not an advisor. It draws on past leadership experience. In my case, I'm able to draw on my boardroom experience as well as being a senior executive, and it allows the executive to think aloud, which sometimes you can't do, or it's inappropriate that you do it in an organisation, and sometimes your private thoughts are without much flesh. But when you start talking about them with somebody, then suddenly the flesh starts to come, and invariably the problem that you're thinking about is actually resolved by thinking aloud. I always ask the person being mentored, well, what actually stops them from sleeping at night? And because if you bring the problems out quite often and talk about them, that sometimes they can be quite minor, but they do affect performance from time to time. And I also, under this same thing, address the issue of the lifestyle balance. Their thinking is challenged, and of course, reactions of the board of directors, that's where I can provide an insight, for example, to the boardroom and how the chairman might react to a particular strategic option or whatever. And finally, the executive performance and relationships, to talk through the person being mentored, their career aspirations, to consider their personal development opportunities, and discuss how they are getting on with their direct reports and how indeed they are getting on with their peer group. And sometimes when you talk about those things, you understand that there may be some problems there that you didn't at first think that did exist. Finally, as I mentioned earlier, I wanted to end up with about 6 principles of leadership that I believed are very important. The first one is that you must recruit very wisely. In my view, it's probably the hardest part of being a leader. You need people with intelligence and judgment and integrity and loyalty, high energy and drive to get things done. And you need people who can stand up and question the status quo and debate strongly but not hold a grudge when a decision is made. And the other thing about this is that you need to cull quickly when a team member doesn't work out, because you can be sure that the remaining members of the team will thank you for it. So that's the first one. Recruit wisely, very important. The second is to balance optimism with calmness. I've already mentioned the word calmness, but optimism by an executive is very, very infectious. You can overdo it if you're not careful, and politicians tend to do this. They call it these days spin, and that can be internal as well as external. You've got to be very careful you don't overdo the optimism part and it just ends up being spin. But at times of stress, a good leader remains calm, and I can't stress that enough. Watch the detail. Now, I know that this, some people can't do this very well, and I know I used to get in an enormous amount of trouble with my management team because you're going in there and wanting a bit more micro information. But I encourage executives to really get themselves across the financials, understand the language of the business that they're in, particularly what the people with those sharp pencils are talking about, and to really understand that. And to also determine what are the principal drivers of the business, just what they are, and know who your important customers are and what they're worth to the organisation. And all this takes a lot of hard work, concentration and dedication, and you can actually tread on people's toes in the process. But believe me, from my experience, and particularly during those days that we talked about a bit earlier, it was well worthwhile that I was able to keep my hands on the micro detail. Reach out for the staff. Now, this applies particularly in a large bank where you must understand that you do lead all the staff. It's all very well to sit, as we did, in 60 Martin Place on the top floor there, and out there as far away as New Zealand and all across the Pacific Islands, in London and New York and so on, up through Asia, you had staff everywhere. And to understand that you're actually leading all of those people, even though you've got a management structure in place. Therefore, I've always encouraged executives to communicate very broadly, to visit their operations regularly, and to participate in any ceremonials that might be on in the organisation and make that part of their role, and to respect that the staff look up to you. It's the one thing that I had a lot of difficulty when I first started becoming an executive, was that I forgot that when I was a young fellow in a branch in the country in Western Australia, and the local chief manager, the head man for the Bank of New South Wales at the time, visited the branch, that was a big, big deal, very big deal. And I remember once, the little town was called Greenbushes. There's no longer a bank there now. In fact, it's almost hardly a town, tin mining place down in the south of Western Australia. And the chief manager called on the manager, and for some unknown reason, he was driving his own car. I think it was just before Easter. He didn't have the driver this time, so he was driving himself. So there was the big black car parked on the wrong side of the street out the front. And I was looking out the window while the chief manager and the manager were conferring in the office with a closed door, and along came the local cop. And of course, put a ticket on the window. And I didn't know what to do. What do? You know, do you run out there and grab the ticket and pay it and just forget about it? But I think the chief manager just said to the manager, fix it. And that was about all that happened. So reach out to the staff, I think, is a very, very important principle of leadership. But one of the real important ones is this one I call embed integrity. I can't stress the importance of this enough. To me, it's not negotiable, and nor is it capable of dilution. The tone of the organisation starts from the top of the organisation, and it applies to all the constituents of the organisation, not only your staff and your executives, but also your customers and your suppliers. Everyone that's involved must operate absolutely with integrity with the organisation. Otherwise, believe me, it's just not worth going on. And finally, genuinely empower your team. Sounds pretty straightforward, but you just got to recognise you can't do everything. And with your team, if they have mistakes, then treat that as a learning experience. Encourage innovative thinking always. And if you stand by them, they'll stand by you, as they always say, because responsibility is two ways. But as I always said to my management team, the leader has the final word. Thank you.
Well, Frank, can I say that was a powerfully honest presentation of what was going on then, and I think highly relevant for really what seems like a skirmish today compared to what you were going with, the world against Westpac. I love that. I've got a microphone in my hand, and Paul Palooza has got one down in the back there. So this is the time, the interactive bit, where you get a chance to ask Frank questions from the floor. So I'm going to ask you to pop your hand in the air and just, and I'll put a microphone in your face and ask a few questions here. We've got about 15 or 20 minutes. I've got a few questions, as always, but I actually don't want to be dominating the floor. So please, ladies and gentlemen, can you pop your hands in the air? There's one just down there. Microphone coming to you right now.
Thank you. Frank, thanks very much. David Harvey's my name, Managing Partner of the Perspective Group. In actual fact, I'm the son of a Bank of New South Wales manager, so we set to say good day.
Thank you.
I'm very much of the view that one should empower the team, but there's also that dichotomy and I guess almost that decision that you get to a point in time where a team member's not working out. At what point do you make that decision? I think I've been guilty in the past of carrying a team member for too long. So what's that point for you?
It is a matter of fine judgment, and as I mentioned in my remarks, that you really do have to cull, because otherwise it's not fair on the team, because they know who the weak person is, the rest of the remaining members of your team, and they'll be very thankful of you when you do go to that point. I guess it's a matter of fairness in the end of the day, fairness to give the person a reasonable amount of time to demonstrate that they can improve, and to make sure that as part of that process that you speak to them and speak to them regularly, but to leave them in no doubt that there is a time pressure here, and that if we don't see demonstrable change and improved performance, then I'm afraid we're going to have to part company. So probably the short answer is sooner rather than later.
More questions from the floor. One right here. I'll give you a microphone.
Hi, I'm Sonia Mercer from HSBC. I'd just like to know, can you give us a little bit more explanation as to how you remain so calm, or what are the strategies you employ to deal with this tremendous amount of pressure on yourself?
I'm not. It's not something, I guess, that you learn in a book or read about in a book. It's something that you are conscious that you have to be. And I guess the absolute pinnacle for me was the minute that the word got out that I was resigning. And there was a lot of emotion and on behalf of your immediate support staff, and real emotion, I mean, and including one particular man who absolutely surprised me. He was in just absolute tears, uncontrollable tears. I was thinking, so hang on a second, I'm the one who's supposed to be crying here, not you. So there's a lot of emotion around you, and I guess it's just something that you have to be conscious about, and so that when that stress starts to come on, or comes on rapidly, then that's the time that a good leader remains calm. Because you know that there's a lot of emotion and a lot of shouting and a lot of arguing going on around you, and you need to be the one just to bring it down and calm it down so that you can have rational thinking and rational decisions being made. So I guess that's not answering your question directly, how do you do it? I think, number one, be conscious of it, and two, just keep working on it, and as circumstances arise, just say to yourself, now, am I being calm? I was going to say, it's harder for a woman than a man, I know. But I won't say that. I won't say that.
Frank, can I ask you, we've got often in the room and on the video too, which we put on our website, got a lot of graduates that are coming through that are looking at banking and finance as a career opportunity. What would you say, I've got two questions, what would you say are the key personality traits? And I think you've talked about that a bit already. But also, what are the qualifications that you think someone entering into banking now should be? Is it still traditionally, accounting, maybe? Is it a degree in commerce is going to be most helpful? Or what are the combination of things that somebody who's coming into banking and finance now you think might need?
Well, I think with hindsight, I wish I had done something in the law. And I think that applies generally across business, not just in banking and finance. That if you've got training in the law in some shape or form, whether it's a degree in law or it's a double degree of some sort or whatever, it's quite different these days, then I just think that it'd help you enormously. Having said that, I know there's some accountants in the room, you certainly do need a good breadth of understanding of accounting. And it's interesting to see the more contemporary thinking about that for directors, about the need for the skills of accounting and the ability to be able to read financial statements and so on to be much more prominent around the board table than it probably really is.
Particularly when the going gets tough, I suspect.
When you're sitting around the Centro board, you really need to know about accounting. So accounting, law, I found from personal experience, and this is going back a lot of years, that I found the commerce degree just a bit too general.
Right.
And hence wanting to go on and do an MBA and struggling through that. And I think that brought it together a lot more from a business perspective. But that was then. I mean, commerce degrees differ by universities, and it's probably different circa 2012 than it was back in the 70s. But the accounting and law are two, I think, that to a trainee banker would be extraordinarily helpful.
And personality traits, it sounds like resilience seems to be
resilience,
the key.
Yes. But a little bit of oomph, I think, because at the end of the day, you know, you're dealing with, I was speaking to a fellow from one of the majors the other day, he's got 10 million customers. So you've got to have a strong sense of relationship in your makeup there somewhere to be able to comfortably converse with a broad range of customers, from the very large corporates, and this is in the case of a major bank, right down to the individual depositor and consumer at the branch level, to be able to comfortably talk to them, but more importantly, allow them to be comfortable speaking with you. And so I think that personality trait of a little bit of life, I mean, one of the best people I've seen at doing that, I have to say, is Gail Kelly at Westpac. And that's no bias on my part that I employed her at St George Bank, but she's one of the best executives I've ever come across, because she had that ability to be able to speak to the larger customers and speak to very, very small customers, and also, of course, to the staff generally.
I've got to agree with you. I don't think she gets out enough.
Yeah.
That talent that she's
Yeah,
got, I've seen her on
she's
Q&A,
hiding.
and when she's dealing with the media, particularly at results time, she outshines the politicians 10 to 1.
Yeah.
Not that that would be too hard. Right, other questions from the floor? We've got one here, down the back here, and then another one over here. I'm just going to go down the back here first, hiding down the back.
Frank Dharmachandran, I'm at Leighton Holdings at the moment, so interesting lessons for us.
Yes.
And was at Westpac about 10 years after you left, for about a 5-year period. My question is about, when I heard your story, it sounded a lot like 2006 to 2008. You know, a few differences, but not many. And people say that the repeal of the Glass-Steagall Act in the US and the ability of wholesale banks and retail banks to come together is what causes a lot of these crises, because the wholesale bank takes huge risk on the back of a large retail bank balance sheet. Your story seemed to resonate a little bit around that theme. Do you have a view on whether these two different types of businesses should be together or not? I'm conscious in particular that investment banks like Goldman Sachs in the US used to be partnerships and didn't take this sort of risk until they got publicly listed. That's
right, and they undertook proprietary trading. It was interesting to hear the Australian chief executive of Morgan's the other day, Stanley Morgan, saying that proprietary trading was one of the big problems. But look, I think they learnt their lessons during the Depression when the Glass-Steagall Act was brought in, and they decided to separate the two types of businesses. And probably that was a good thing at the time. And it was interesting that all those years later that the President allowed the deregulation to occur, and you can almost track back to that point when all the problems really started. But you know, with all that, English-style banks, and we followed more the English banking system than anyone else, we've been able to live with the wholesale side of the banking to retail banking in reasonable balance. In Westpac's case, it got out of balance, and that was, to some extent, personality-driven. And probably a bit of a lack of knowledge on behalf of some of the senior management, and also certainly many members of the board at the time. But all those lessons, I'd like to think, have been well learned now, so that it was interesting to see the effects of the GFC on certain entities. They were almost sitting duck entities. You could almost sit down and write the names of who you think's going to go, and sure enough, you could tick them off. Whereas the fundamental corporate world stayed pretty well intact, differently to the 90s recession.
It's been said many times that we haven't suffered through this GFC as a result of the learnings of the 90s, particularly, and then the HIH collapse. I suspect there's a lot in that, isn't there?
Oh, I think so, yes, yes.
Question down here.
Breffney White from CBA. This is a mentoring question, given your current roles. Whilst I currently mentor some colleagues in CBA, I myself am considering getting a mentor from outside the banking industry, and I was just interested in your views on cross-industry mentoring and I suppose the pros and cons in having a mentor, mentoring someone from outside your industry, and just from your background in mentoring, what your views are on that.
Well, in the case of the clients that I have, the ones that are specifically in the banking industry were, their requirement was industry specific. So they actually came to the SMG group and said, look, we really do want someone from the bank industry. But I do have others, and they have a banker talking to them about an industry that is not banking at all. So and sometimes it can be an enormous advantage, because I think that a mentor who's mentoring outside his natural and his past experience may be a lot more objective and may be much more of that sounding board that I mentioned, that confidential sounding board. So I think it's not an issue, but it depends on what the client wants. If the client is indifferent about whether they want someone specifically in an industry, then that's of course is well respected. But otherwise, we have in our group several mentors that come from a variety of different areas, and they mentor into a variety of different industries. And in fact, that's more the norm than my case, where most of my clients are in banking.
Frank, out of the leadership principles that you've got there, the 6 or so, from your executive career, your non-executive career, and now your mentoring capability, which is the one that you feel is held truest to you?
Truest to me in the sense of?
In terms of effectiveness. In terms of the one that got the best results.
Oh, integrity. I feel very strongly about integrity. And it was interesting that well before I started thinking about it and how important it was, the whole issue of ethics came up and started to be a course at the Harvard School, and we created the Ethics Centre here with Simon Longstaff, the St James Ethics Centre. All that goes to integrity, and so a few of us were discussing this in-house the other day, that if it's an issue, we shouldn't be discussing the issue, because it should be just natural that if you operate a company as a chief executive with the absolute high integrity, and you expect your management people to do exactly the same, then it gets rid of a lot of the rubbish of discussion about whether you should do a transaction or not. I often quote the story that at the St George board there was the former managing director of Advance Bank, who you'd know very well, John Thame, used to have a saying that if there was any doubt in our mind that our customers or our shareholders are not going to like this, just ask yourself the question, would you like to see this issue on the front page of the Daily Telegraph tomorrow? And if that's the case, then don't do it. And that was his test. Very simple test, but very effective.
Frank, I might ask one last question. Do you think that the banking and finance industry has learnt the lessons in the last 20 years, and do you think that, particularly on the basis on that topic of integrity, that that it really has moved on significantly in the last 20 years, as we probably in this room hope so?
I think the answer to that is yes, with a common but. There is still on the fringes, and I'm thinking of the housing mortgage area here, the ability of some people to bypass quite rigid and rigorous processes to get the business through, which is exactly what happened in the United States, and one of the reasons why things went so badly in the mortgage area here. Well, from my little ears around the Southern Highlands, I hear that it does go on in Australia. Now, it may not be widespread, but if it does go on and you come across it in your particular line of field, then you've really got to jump on it, because it indicates the type of person that you're operating with, and frankly, the type of customer you're dealing with, because they're probably going in there with their eyes open as well. So I think that's how I'd respond to that.
Excellent. Well, with that, ladies and gentlemen, I'd like to ask you all to put your hands together to thank Frank for this really honest, great presentation.